Hello, just waiting for the live event. Hello, fans of the Financial Service Industry Monitor. Mark Siplorp here to talk to you about real estate, in particular, the financialization of real estate in Canada. In particular, this is an important topic that touches all Canadians and has a big impact on our economy. So currently, in the Canadian market, there's been a lot of changes going back to, let's say, the last 25 years, in particular, with the introduction of REITs, real estate investment trusts. There's also asset management, private equity, and foreign buyers, as well as investors, Airbnb, and many other factors like public policies that have impacted the Canadian real estate, in particular prices. As many people are aware, Canada is considered a giant asset bubble, not just real estate, but stocks as well. In particular, real estate, though. And real estate, some would even consider it a Ponzi market that has been sucking in new home buyers that are now below water in terms of their asset value compared to their debt on the equity in the investment. So, what I want to talk to you about today was a few things that have been impacting the real estate market. In particular, REITs, they've been investing in real estate in Canada. REITs actually are attributable to about 120,000 rental units in Canada. And this is a problem because it takes away the potential for home buyers and also small-time investors to acquire a property that has traditionally been for small-time investors. Now, one of the things that is an issue is that home buyers are looking to, and I'm going to just show you this in this article here that appeared in Forbes magazine. Basically, the goal of traditional home buyers is the manifestation of a dream. But for REITs, it's something else. For them, it's all about the return on investment. And many people wonder why REITs participation or how it distorts the market. And there's many reasons why it would distort the market. One of the issues is that REITs are basically getting funds for a much lower cost than average consumers. They're also in the market to gain a profit, whereas homeowners generally see it as an investment secondary to a place to live. Another thing that happens when housing prices go up is that they become a drag on the economy. So, for example, money that might go into investments would be tied up in houses. Currently, I think about 40% of consumer money is going into housing costs. That's a significant amount of money. And in larger cities like Vancouver and Toronto, the problem is exacerbated. So another issue that has been brought up, in particular in the UK, is that REITs have contributed or now own $1 trillion worth of real estate in the UK. This is a big change that's actually happened over the last 10 years. Let me just adjust my mic here. So the net asset value of real estate investment funds has more than tripled to more than $1 trillion over the past 10 years, boosting the interdependence with property markets, the ECB said Monday in its macroprudential bulletin. This is a significant issue, and it affects Canada and the US. And one of the things that can actually that can be causing risk, and this is proven by a couple of issues that have come up recently. For example, Brookfield, a Canadian property management company, has actually defaulted on two of its assets in the US, one for $161 million and one for $700 million. These were commercial REITs, but that said, the issue applies to residential homes, residential properties as well. So when there's a mismatch between the cost of funds, the value of the asset, and the income of the asset, these REITs are often exposed in a way that a homeowner might not be. So, for example, let's say Silicon Valley Bank is a perfect example. Silicon Valley Bank uh, invested in government treasuries, thinking that that was a prudent thing to do, and without risk, or would minimize the risk. But what happened since that time, um, their loans and their investments, which would be treasuries and bonds, there was a mismatch because their loans were set at a long-term value, whereas the short-term investments were generating lower income, and their short-term investments were suddenly exposed to a higher interest rate. So, for example, let's say they were borrowing money at 1%, and then suddenly the Fed ups the bank rate to 4.5%, 3-4%, whatever it is. There's suddenly a mismatch, and that exposes banks just the same as it does expose hedge funds, REITs, etc., to a risk due to a mismatch in funds. That's just one of the issues related to REITs. Now, the other things that are contributing to higher prices in Canada is foreign buyers, um, Airbnb, investors. And so to break it down, REITs and private equity, they have about 20% of the rental stock in Canada. Foreign buyers, up until there was a restriction from the federal government and provincial governments, were purchasing about 7.2% of properties in Canada. Investors, private investors, people with means, accounted for 20% of the purchases recently in Canada. Airbnb currently have about 128,000 or more rental units in Canada that have been removed from the rental market. That's about 3% of the market. REITs have about 120,000 rental units currently. That's about 3% of the market. And private investment vehicles or public pension funds, for example, Starlight, which is the public sector pension in Ontario, have 61,000 rental units that they manage. These are factors that significantly impact the price of housing in Canada. Obviously, other issues that are impacting the price of housing are low interest rates leading up to the current inflationary times when the government was forced to increase rates. The rates are now at about 4.5% in Canada, which pushes the prime rate to about 5.85 in some cases for average consumers. REITs, hedge funds, pension funds obviously pay a lot lower for the capital that they use in most situations. And what ends up happening in the case of Starlight, let me just have a really interesting article about this. This is an article that appeared in Breach Media, and they're talking about how, in particular, the Public Service Pension Investment Board is teaming up with real estate firms and betting on displacement of low-income renters. So what basically is happening is this pension fund, which is geared to making profit, has more than 6,000 units in Toronto alone. And they, according to Breach Media, they employ predatory practices that are a direct result of pension fund managers betting on financialized real estate, increasingly at the expense of tenants. So one of the things that they're doing is increasing rents. In this particular article, let me just get back to this. They're saying that one particular building is seeking a 4.2% increase, 3% over the amount permitted annually under provincial regulations. So that's just one example. They're also pushing out tenants. They're increasing rents as tenants transition. So these are a lot of issues that have a big impact on the Canadian market, and they are impacting the real estate prices. They're all contributing to the asset bubble that we're experiencing. There's other factors as well. For example, since the government started increasing interest rates due to inflation. One of the things that's actually happened is that a lot of homeowners are underwater. And so what's going on is that they're actually amortizing their mortgages at 30, 35 years, in some cases 70 years, because otherwise they'd be underwater. These are major issues that impact homeowners, the government, and the economy in particular, because as I said earlier, high house prices suck money out of the economy because it forces individuals to put money that they could have otherwise invested or spent in the economy into other activities that are not producing, and they're not productive. So I think that's all I'm going to say on this particular issue. I'm actually going to post a link to a report that you'll be able to read and see for yourself exactly what's going on. I just want to provide a summary of some of the things that are going on and give you a quick snapshot of some of the factors that are increasing house prices in Canada and causing economic problems that will impact younger generations for many years and pose a great risk to our economy. So that's all for now. I hope you enjoyed the video, and if you did like this video, please subscribe to my channel. You can either subscribe to the FSIM directly in the newsletter or the YouTube channel, and obviously like and subscribe if you want to encourage more of these types of videos in the future.